Three reasons why it is the worst time to buy Luna. Yes, Luna, the worst time. Three top reasons. My name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008. And I'm on a mission to help you increase your financial health. So if you're new to the channel, subscribe. Everything in the description box will be the links. But we are going to look at the best way, one of the best ways that I've found to read the price action so you are buying at the bottom and really selling at the top. And we're going to dive into Luna as the example today. So this is Luna's website, Terra Luna, programmable money for the internet, spend, save, stake, live, or like never before. Very big project. It's actually ranked number 7 now on CoinMarketCap. You know, in terms of market capitalization, it's $34 billion. It's $5.4 billion trading volume, and it's had some amazing price movements over the course of the last few months. So we have seen Terra Luna go from $5, explosive, all the way up to $100. That's a 2,000%, but it's now the right time to buy. So we're talking about three main reasons of how you want to look at the markets and get the edge in your favor, the probability in your favor, where you're buying, really buying at these zones down here, and selling at these points up here and up here. So the first thing we want to look at is momentum, right? We always want to look at 2 time frames. So first, this currently is a daily chart. We're going to dive into a weekly chart where the data is looking like is a weekly data chart where every data point is 1 week. So that's the top left-hand corner where I keep my weekly chart, but it's actually the bottom part that I want to focus on. This is called a momentum indicator, more specifically the stochastics RSI. And what it tells us is what is the rhythm of the market. Is it looking like it's going to continue to the upside on the rhythm, or is it going to have a reversal to the downside? Now, what this simply tells us in really simple terms is when the blue line is over this black line, the upside should be quite limited. The upside should be quite limited. That by itself is not enough information, but it gives us a big clue, right? So that's the first piece that we want to look at. The upper time frame, the higher time frame momentum is something called overbought. So the upside movement should be limited. But now what we're going to do is we're going to combine that with the second factor, going back into a daily chart. What most people don't realize is the markets are driven by the emotion, the human emotion when it comes to mass psychology of fear and greed. And it's buying and selling behavior. And Rouse Nelson Elliott created something called the Elliott wave theory. So most markets move in a 5-wave sequence, a 1, 2, 3, 4, 5. And after a 5-wave sequence, what typically follows time and time again is a 3-wave correction. And it normally looks like this, A, B, C. So what we're going to look at now is the pattern. So the second thing is the pattern. Is there information that here is telling us this looks like we're coming towards the end of a trend, right? There's this great saying when it comes to trading, the trend is your friend. Ride it until its end, until it reaches its bend. It looks like to me, it's likely we are looking at Luna reaching its bend very soon. So we are talking about a 5-wave sequence in a pattern, 1, 2, 3, 4, 5. But we're going to do something a bit more advanced today. With this wave 3 over here, you can see it breaks down into waves in between. With this wave 4 on the way down, you can see it breaks down to an A, B, C. And what we're going to look at now is this wave to the upside, this wave 4 to wave 5. Does this break down to a particular pattern and what we should be aware of? Well, wave 5s, and just so we're clear, what I'm talking about really is this part of the movement, the market over here, this part. Wave 5 typically breaks down into a 5-wave sequence. And when the patterns are very clear, we want to use that information. So we're going to do 2 degrees of wave counts. And what I mean by that is, this is 1 degree. This simple, the 5th wave. But now we're going to break that down to another degree and looking at the waves within this structure. Is there any clues within this structure that tells us we're coming towards the end of a trend and now is the time to be looking to potentially take profits, tighten your stop losses, and more importantly, not buy? Now, it doesn't mean it cannot go up because we can only do probabilities and never certainties, but we want to stack the probabilities in our favor. So now look at this. And this is what's fascinating with Elliott wave and Fibonacci, because that's going to be the third factor, Fibonacci price ratios. With Elliott waves, it was shown that there's waves within the waves, and the markets are always expanding and contracting. And over here, it doesn't get much clearer than this. Where wave 1, a wave 2, what looks like a wave 3, a wave 4, and a wave 5 of a wave 5. And we're just going to change this so it's really, really clear to an intermediate count. So it's really clear for us to see. So what we have here now is a pattern called a wave 1, 2, 3, 4, 5 of a wave 5 with the weekly momentum overbought. So now we've got two things telling us that the upside potential of Luna is limited, right? The upside potential of Luna is very limited. So there's two things. So there's two reasons why we shouldn't be looking to buy Luna. Doesn't mean it's not going to explode to the upside, but we always want to stack the odds in our favor. So I'm hearing you ask, yep, Jagir, what's the third? What's the third? The third is something very, very powerful. And what most people, again, don't realize, because this is mass herd psychology, and what we're actually doing is we're measuring the psychological mood of all the participants when it comes to Luna. How are people feeling right now? Because there's going to be a bunch of people that bought down here that are in huge profits. There's going to be people that bought here that are in some profits, and others that have just bought in this region that are currently break even. Well, what is the psychological mood and what typically happens? So what we're going to look at is the relationship between wave 1 and 3, wave 1 to wave 3 to wave 5. And then we're going to look at this relationship as well. And there's some key Fibonacci ratios. So we're going to keep it quite simple. And by the way, if you like today's content, support the channel, like the channel, subscribe, hit the bell notification, and share. I really, really appreciate it if you share the content, because it makes a real difference to the channel. So I appreciate you being here. So the first Fibonacci ratio is something called the external retracement. External retracement. We actually measure wave 4. We're going to measure wave 4, and it's going to project in advance the typical wave 5 zones that we should anticipate that's most common when it comes to buying and selling behavior. So the first one is this. We're going to measure wave 4, 2 clicks. It's called an external retracement, and there's two key ratios, which is 1.272 and 1.618. And then we're also going to do something called a Fibonacci on this particular software. This is TradingView, by the way, this software. It's called trend-based Fib extensions. We're going to now measure, this is important, because we're going to measure wave 1 to 3, and we're going to project it forward from wave 4. So it requires 3 clicks. So we're going to go click, click, and then a third click over here. And wave 5, with that wave 1 to 3 relationship, the most common ratio is 62% to 100%. And then last but not least, what we're going to do is we're going to focus on this intermediate wave count. Intermediate wave count down here. This is really valuable information, because now we're looking at multiple degrees and time frames with Fibonacci ratios, which will be very, very powerful. That tells us what's the upside potential and limitation that we want to be highly, really, really, really super aware of. So we're looking at this 1, 2, 3, 4, 5. So we can do a wave 1 to 3 again and project it from 4. And we're also going to do an external retracement. And we're looking for an overlap. And when these Fibonacci ratios overlap, it just tells us the strength. And the more overlap there is, then the more strength. It's like a psychological resistance zones that human behavior literally repeats itself time and time again in all markets, but especially cryptocurrency. So we can measure 1 to 3, project it from wave 4. So you see we've got this cluster now, this cluster down here. So now this zone is much more important than the upper zone, right? But we also want to do an external retracement like we did before, but with this particular wave 4 down here. And we're just going to focus on the higher ratio of 1.618, which is the golden mean of Fibonacci ratio. So now, what we're looking at is really this zone here. It's quite broad, but it's ranging from $100 to around $130. But now what we want to do is be hyper aware that we are reaching what looks like a wave 1, 2, 3, 4, 5 of a 5 in this Fibonacci price resistance zone with the weekly momentum on the upside. So then the last factor, which is really the first factor, is what is the current momentum on the daily chart. So the daily chart, it shows us these highs and lows are marrying up quite nicely. So what we want to do is just make it a bit bigger here. Be very aware when the blue and the red line become overbought, and especially on the next bearish reversal, that may coincide with the top. And there you have it. There are the 3 key reasons why now is not the right time from a probability standpoint to buy Terra Luna. And if you're in Terra Luna, it might be worth considering. Taking profits. So I'm going to give you 2 bonuses today, 2 bonuses, and the 2 bonuses are, how do you trail a stop loss? So if you're in Terra Luna already, we're going to go to a candlestick pattern. Because we're fast approaching this zone, we don't know. That's the key thing to know. Nobody knows if Terra Luna is going to overextend. We don't know. Because there's a lot of volume in this, right? A lot of eyeballs on this. The top 7 cryptocurrency right now. So rather than selling at a fixed price, one key great strategy that I learned over when I was trading Forex was a trailing stop loss. Because we're now approaching this zone, you should have your stop loss no lower than this swing low, because this is the first indicator that we've got a trend reversal. But now that we're approaching this zone, what would be better is to now tighten your stop loss to a 1 bar low. And as we get the next bar, let's just say the next bar does this, then you trail your stop loss to the next 1 bar low. And you keep doing it until the market takes you out. Yeah, and if it takes off, you'll just capture more of the market. The second bonus I have for you is, if Terra Luna does hit a wave 5 of a wave 5, what is the correction that we should anticipate? How much should it correct? And we're going to finish on that today. So let me just zoom out again. Let's go back to our line chart. Let's just clean this part of the chart up. Again, I'm just going to clean this up here and zoom in like this. All right, so if the market does go below this particular low down here, but especially this low down here, this will be one of the major confirmers that we've got a trend reversal to the downside, right? And then what we want to do is just a very simple price retracement. Most corrections when it comes to ABC, even on a macro degree correction, we're just going to project. Let's just say Terra Luna did get to $108. Most markets will correct between 50, 62, and 78.6% correction. And the correction normally takes a minimum of 38% of the entire 5-wave sequence. So we measure the 5-wave sequence. So we should anticipate Terra Luna doing something like a potential A, a potential B, and then something like this, potential C. And we're talking about a major degree correction here. We're talking about August. So there you have it. Terra Luna, weekly momentum is overbought. Daily momentum on the next bearish reversal. We've got pattern on 2 degrees, a wave 5 of a wave 5, and we've got key Fibonacci ratios clustering over that says Terra Luna looks like we are approaching a high, and we should anticipate sideways to down. So if you like today's content, like, subscribe, hit the bell notification. I have a free Elliott Wave and Fibonacci masterclass that covers this in a lot of depth. The 3 fundamental rules of Elliott Wave that you must know that allows you to see the psychological buying and selling behavior. And if you can see in advance, you can prevent yourself from FOMO, fear of missing out, where people panic buy. And a lot of people are 2 steps behind the market, meaning right now, a lot of people feel like they should be buying Luna because it's been going higher and higher and higher. So it feels like, okay, I don't want to miss this boat. I want to buy now. But the rocket ship has taken off. It's gone from $5, 2,000% up to $100 with a 5-wave pattern, which says the psychological mood of all the people betting on Terra Luna on the price action are ready to take profits. And a wave 2 is like a retest of that $5 mark, that beginning mark again. And we should see a big correction over the coming weeks, but especially the months. So it's not the best time, and now's time to take profits. So take the free Fibonacci and Elliott Wave masterclass. I covered it at a really, really high level for you. You have the opportunity to join my private Telegram group. We do workshops so you can ask me questions directly. We are going to finish on a quote. The quote of the day today from my book is chapter 4 from Benjamin Franklin, wise man. Wise man. We're going to learn from these wise individuals. He or she who is good for making excuses is seldom good for anything else. Now, the reason I bring that one up is, Buddha said a great quote as well. You and your world are composed of your thoughts, and the wise person controls their thoughts. And now, when you are articulating your thoughts, whether you're talking to someone else or you're talking to yourself, your mind is always listening, and your world is actually composed of your thoughts, because we operate 95% unconsciously as human beings, and we want to be aware of that. So now is the time, especially we're in this very early stage of this blockchain trend. We've got 20 years before it becomes really, really mainstream. And we've got this current bull run that we're in, that we're probably going to see some really good price action. But it's now to really sharpen your axe, so when the opportunity comes, you are prepped. But also the prevention of buying at the top. A lot of people buy at the top and sell at the bottom. That's how the emotions feel. Like when it's feeling, optimism is there, then people buy. And then when the fear is there, people sell. We want to do the reverse. We want to go when the fear is the highest. That's actually often, and it combines with Elliott wave theory, that's often the best time to buy with the highest probability. And when optimism is the highest, like with Luna, is like there's some amazing price action, that is often the best time to sell. So there you have it. Like, subscribe, hit the bell notification. We do daily content. All the links are in the description box below, and I'll see you very soon.